Banking Law and Practice. Chapter 1. Introduction to Banking. Part 3. Specialized types of banks. Women banks. Bharatiya Mahila Bank was India's first women's bank, launched in 2013 with 1,000 Indian rupees crore capital to provide banking services and financial empowerment primarily to women and women's self-help groups. Payments banks. A payments bank can accept demand deposits up to 1 Indian rupee lakh and offer remittance, mobile payments, ATM, and net banking services, but cannot advance loans or issue credit cards. Microfinance banks. Microfinance banks provide small financial services to unemployed or low-income individuals who have no access to regular banking, enabling them to take small business loans safely and ethically. Regional Rural Banks (RRBs) were established under the Regional Rural Banks Act, 1976, based on the Narsingham Committee recommendations to exclusively serve small farmers, artisans, agricultural laborers, and rural entrepreneurs. Development banks. Introduction, IDBI, and Exim Bank. Why development banks? Commercial banks could not provide the long-term capital needed for industrial development. Development banks were created to fill this gap by providing long-term loans and equity finance. IDBI, 1964. The Industrial Development Bank of India was the first development bank, serving as the apex body for direct finance to large industries and refinancing of term loans made by other institutions. IDBI functions. IDBI promoted entrepreneurship development programs, supported voluntary agencies for weaker sections, and set up technology consultancy organizations for small and medium enterprises. Development banks. Introduction, IDBI, and Exim Bank. IDBI today. From January 2019, IDBI became a private bank under the control of LIC of India, marking a major structural shift in its ownership and functioning. Exim Bank, 1982. The Export-Import Bank of India was established under the Exim Bank Act, 1981, wholly owned by the government, to provide integrated export-import finance support to Indian businesses. Exim Bank's role. Exim Bank provides buyer's credit, export credit, finance for joint ventures, capital goods exports, technical services, and pre-shipment and post-shipment finance for trade. NABARD, SIDBI, and National Housing Bank. NABARD, 1982. The National Bank for Agriculture and Rural Development was established on July 12, 1982 under a special Act of Parliament, with 100 Indian rupees crore capital, as an apex institution for rural development. NABARD's role. NABARD provides short, medium, and long-term finance for agriculture, small industries, cottage industries, handicrafts, and all rural development activities, functioning parallel to RBI. SIDBI, 1989. The Small Industries Development Bank of India was set up as a wholly owned subsidiary of IDBI under the SIDBI Act, 1989, to provide finance and development support to MSMEs across the country. NABARD, SIDBI, and National Housing Bank. SIDBI's role. SIDBI provides finance to MSMEs through commercial banks, NBFCs, regional rural banks, and state industrial development banks, coordinating the entire small industries finance ecosystem. NHB, 1988. The National Housing Bank was established on July 9, 1988 as an apex institution for housing finance, wholly owned by RBI, based on recommendations of the Rangarajan Committee of 1987. NHB's role. NHB provides affordable housing finance to different income groups, regulates housing finance companies, and works to increase the supply of buildable land and building materials in the country. UTI Bank, now Axis Bank, IBI, and RIDF. UTI Bank, now Axis Bank. UTI Bank was the first new private bank established in 1994 when the government permitted fresh commercial banks. It is a joint venture of UTI, LIC, GIC, and 4 public sector insurance companies. IBI history. The institution started as the Industrial Reconstruction Corporation of India in 1971 with 10 Indian rupees crore capital, became the Industrial Reconstruction Bank of India in 1985, and was converted to IBI in March 1997. IBI role and status. IBI provided loans for modernization, diversification, and expansion of large and medium industrial units. It is currently under liquidation after completing its industrial reconstruction role. RIDF purpose: the Rural Infrastructure Development Fund was set up by the Government of India to provide finance to state governments and state-owned corporations to complete ongoing rural infrastructure projects. RIDF management: the fund is maintained by NABARD and its scope has been extended to social sector projects including primary education, health facilities, and drinking water supply across rural India. Finance corporations and merchant banking. Why finance corporations? Finance corporations were established as development banks to deal specifically in equity capital and provide long-term finance to manufacturing and infrastructure sectors. IFCI, 1948. The Industrial Finance Corporation of India was established in 1948 as one of the first development finance institutions to provide long-term loans to manufacturing and infrastructure projects. ICICI, 1955. The Industrial Credit and Investment Corporation of India was established in 1955 to provide long-term industrial finance and was later converted into a full-fledged scheduled commercial bank. What is merchant banking? Merchant bankers assist entrepreneurs from the concept stage to commissioning of their proposed business, handling all formalities, fundraising, and legal requirements for a fee. Role of merchant bankers: merchant banks conduct fundraising through IPOs, provide financial advisory for mergers and acquisitions, and manage large corporate loans. Some firms retain merchant bankers as ongoing advisors after commencement. Reserve Bank of India, history and need. History: the three presidency banks of Bombay, Bengal, and Madras were merged in 1921 to form the Imperial Bank of India, which served as both a commercial and central bank initially. Hilton-Young Commission, 1925. The commission recommended the establishment of a separate central bank for India. The RBI bill was introduced in the Legislative Assembly in 1927, but was abandoned in 1931. Establishment: the RBI Act was passed in 1934, and the Reserve Bank of India was formally inaugurated in April 1935. It was nationalized in 1948 and began operating as a government-owned bank from January 1, 1949. Reserve Bank of India, history and need. Need: before the RBI, currency and credit were managed separately by the government and the Imperial Bank of India without effective coordination, creating structural instability. Monetary stability: a central bank was needed to stabilize the value of money both internally and externally, and to regulate the currency and credit system through a single unified authority. Structural stability: the establishment of the RBI removed the instability of the earlier dual authority system and gave India a proper central bank to oversee all commercial banking activity. RBI organization and management. Organization: RBI started as a shareholders' bank with a paid-up capital of 5 Indian rupees crore divided into 5 lakh shares of 100 Indian rupees each. It was nationalized in 1948 and began operating as a fully government-owned bank from January 1, 1949. Board of Directors: the Central Board has 15 members, 1 governor and 4 deputy governors appointed by the central government, 4 directors from local boards, 6 directors nominated by government, and 1 government officer. The Governor: the Governor is the chairman of the board and the chief executive of RBI. The governor and deputy governors are appointed by the government for a period of 5 years as full-time officers. For local boards, RBI has 4 local boards at Bombay, Delhi, Calcutta, and Chennai, functioning in an advisory capacity. The State Bank of India acts as RBI's agent at places where RBI has no office. RBI functions: monetary and non-monetary. Monetary: issue of currency. RBI has the sole right to issue banknotes of all denominations except the 1 rupee note and coins, regulating the currency system across the country. Monetary: credit and liquidity. RBI controls the volume of bank credit, manages overall liquidity in the financial system, and monitors money market operations to maintain economic stability. Monetary: forex and payments. RBI regulates all foreign exchange operations and oversees the payment and settlement system under the Payment and Settlement System Act, 2007. RBI functions: monetary and non-monetary. Monetary. Banker to government. RBI acts as banker, financial agent, and advisor to both the central government and all state governments of India for all banking and financial transactions. Non-monetary. Licensing and inspection. RBI has power to license banks and branches, inspect their working methods, manage liquidity of bank assets, and ensure regulatory compliance. Non-monetary. Mergers. RBI facilitates and approves mergers, acquisitions, amalgamations, absorption, reconstruction, and liquidation of banking institutions in India. Monopoly of note issue. Legal basis. Under Section 22 of the RBI Act, the Reserve Bank of India has the sole right to issue banknotes of all denominations except the 1 rupee note and coins, which are issued by the government. 1 rupee note and coins. The 1 rupee note is issued by the Government of India and is called a currency note. All other denominations are issued by RBI and called banknotes. Issue department. The issue department issues banknotes against assets like gold coin, gold bullion, foreign securities, and Government of India rupee securities held as backing for the currency issued. Monopoly of note issue. Demonetization 2016. On November 8, 2016, the government demonetized 500 Indian rupees and 1,000 Indian rupees notes to curtail the shadow economy and issued new 500 Indian rupees and 2,000 Indian rupees notes in exchange. BRB and MPL. In 1995, RBI established Bhaskar Reserve Bank Note Mudran Private Limited as a wholly owned subsidiary to increase bank note production, with its head office at Bengaluru. 2 printing presses. BRB and MPL operates 2 note printing presses, one at Mysore in Karnataka and the other at Sulboni in West Bengal, to meet the growing national demand for banknotes. Note issue systems. Proportional reserve to minimum reserve. Proportional reserve system, used from the start of RBI until 1956. The issue department had to back 40% of all notes issued with gold and foreign securities, with gold value not less than 40 Indian rupees crore. Shift to minimum reserve system. In 1956, the RBI Act was amended, replacing the proportional reserve system with the minimum reserve system, aligning India's monetary system with IMF guidelines. Minimum reserve system. The statutory minimum reserve against note issue was fixed at 115 Indian rupees crore initially. This was later revised to 200 Indian rupees crore in 1957, which remains the standard today. Composition of reserve. Of the 200 Indian rupees crore minimum reserve, at least 115 Indian rupees crore must be held as gold bullion and gold coin. The remaining balance must be held in the form of foreign securities. No maximum limit. Under the minimum reserve system, there is no maximum limit on the amount of currency that can be issued by the Reserve Bank, giving flexibility to meet the needs of the growing economy. Banker to government. Legal basis. Under Sections 20, 21, and 21A of the RBI Act, the Reserve Bank of India serves as banker to both the central government and all state governments of India. Banking transactions. RBI accepts all money due to the government, carries out exchange remittances, manages public debt, and handles short-term government securities like treasury bills. Without remuneration, RBI performs all banking functions for the government without any remuneration, but receives the benefit of holding the government's cash balances without paying any interest. Banker to government. Ways and means advances. RBI provides temporary loans called ways and means advances to both central and state governments, repayable within 3 months, to finance urgent development expenditure. Selling treasury bills. RBI sells treasury bills on behalf of the Government of India through weekly tenders, providing short-term funds to the government and maintaining liquidity in the banking system. Financial advisor. RBI advises the government on financial and economic matters including financing patterns, resource mobilization, international payments, and stabilizing the external value of the rupee. Banker's bank, lender of last resort, and controller of credit. Bankers Bank. Every scheduled bank must keep a cash balance with RBI as cash reserve ratio. This centralizes banking reserves and helps RBI regulate the overall credit position in the country. Lender of last resort. RBI comes to the rescue of commercial banks in financial difficulties by rediscounting their bills of exchange and buying government securities to provide emergency liquidity. Controller of credit. RBI controls the volume of credit created by commercial banks through both quantitative methods like CRR and bank rate, and qualitative methods like selective credit controls. Bankers Bank, lender of last resort and controller of credit. Bank rate policy. RBI changes the rate at which it lends to commercial banks, influencing interest rates and the availability of credit throughout the entire banking system of the country. Open market operations. RBI buys and sells government securities in the open market to increase or decrease money supply and regulate credit levels in the economy as needed. Selective credit controls. RBI issues directives to scheduled banks, regulating credit to specific sectors through licensing, inspection, and targeted lending guidelines to achieve desired economic objectives. Banking Laws Amendment Bill, 2024, Key Provisions. Definition of fortnight changed from Saturday to second following Friday to the 1st to 15th or the 16th to the last day of each calendar month for cash reserve calculations. Director tenure. Maximum consecutive tenure of a director in cooperative banks increased from 8 years to 10 years, giving more continuity to experienced directors. Prohibition on common directors. Exemption extended to directors of central cooperative banks to serve on a state cooperative bank board in which they are a member, without violating the prohibition. Substantial interest threshold in a company increased from 5 Indian rupees lakh or 10% of paid-up capital to 2 Indian rupees crore, reflecting present-day economic realities and business scale. Banking Laws Amendment Bill, 2024, Key Provisions. Nomination. Deposit holders can now appoint up to 4 nominees instead of 1, simultaneously or successively for deposits, lockers, and safe custody items. Unclaimed amounts. Shares with unclaimed dividend for 7 consecutive years and unpaid bond interest or redemption amounts will be transferred to the Investor Education and Protection Fund. Auditor remuneration. The bill empowers banks to decide their own auditor remuneration directly, instead of RBI fixing it in consultation with the central government. Thank you for watching. Banking Law and Practice, Chapter 1 complete. Chapter 5, Skill Development. Subscribe to Riaz Notes.